Hey, what's going on, guys? It's your boy MC Fire coming at you again with another market recap uh, kind of video. We want to definitely start out by saying thank you for joining us and welcome to the channel. So let's start this puppy off, right? So coming up here in December 18, there's going to be a new potentially a new Fed rate. The Fed has already said, hey, they're cutting rates. The current rate is 450 to 475, and analysts are anticipating that hey, there's a 74% chance that that should be cut about another 50 basis points. So if we can get that down another 25 to 50 basis points, there is a very high likelihood that that could happen. So we want to start out with some maybe potentially good news, maybe bad news for you. But as the Fed starts to cut rates here, you can go to this is the CME Fed Watch tool. It's completely free, and look up what. Actually, you can also know the meeting dates. So the next meeting dates are up here. You'll have one at the end of January as well, and in the middle of March. So 18th of December, that's coming up. It being the 3rd of December, not too far away, but the market is anticipating those cuts, right? We could potentially see a flooding of the market of, I don't want to say cheap money, but more accessible money. But that's kind of, is it baked into the cake already? Since we had a couple of Fed cuts already. Let's go over our in plays on the day, and then we'll start looking at the broader market as a whole. So we got minus as in play from yesterday. Nice little setup candle here. It is in negative territory, so potentially looking. We got kind of a double stack candle right there. This one and this one are currently in position, but not necessarily looking for too much here because if you look on the weekly on the left hand side, if it breaks, it really could run down to 3 ATR or even potentially go down to that fundamental level there. Ideally, we'd like it to be more kind of in the wave. This is a little extended, so definitely be mindful if you're looking at something like this. It is not exactly ideal buying position, but it is a setup, so we're gonna make mention of it. You got NVST, kind of watching that a little bit as it did push up into the $3 range. Normally, we don't like to trade. Um, we don't like to trade things below $10, but this kind of caught my eye only because what it does. If you could do the research on that, we'll talk about that probably on a Sunday video. Kind of get into the fundamentals here, but it did breach pivot highs there. So there might be a potential for some changes on that. This is kind of what we like to see if you have a buy biased, a lot of selling pressure coming in, and then these guys that are laggards kind of getting caught out there. Nice clean break, take the buy, and it ripped to the upside with you getting out at the first sign of danger. So keep that in mind. But just kind of watching this one. I did hit lows here recently of $1.75. So the returns could be absolutely massive on that. We're watching that to the upside, but keep in mind, price always has a say. PCG, kind of more in our wheelhouse here. Was at relatively 3 ATR highs, and it kind of remained up there. Kind of since, like for like the last 3 weeks, it's been up there a couple of times, peaking up there, but for 3 weeks, it's kind of been pinging off those highs. 3 weeks, nice juicy pullback. So it's coming in strong on the setup. So we want to definitely be mindful. This could be the start of a trend change, but it also could be the start of increased selling or increased buying. If those guys get off sides, right? SCHD, kind of also a little bit of the same thing. We did see some, we did see a setup candle here, but the fact that it's at 3 ATR, ideally we'd want to get it a little bit more in the sweet spot, but in a strong uptrend, bottom left, top right, since the 1127. Because it's in this very strong uptrend, we're liking that. We went on and took some profits on SCHD on a slight pullback, and shout out to us. So we're kind of here, but it could actually continue. So we just kind of have the old mantra of wanting to buy low, sell high, and actually do that instead of just use it as a talking point. SYM, really kind of liking what's going on here. We do want to see it re-break. Sometimes I'll sit on something. I'm like, this isn't exactly ideal, so I'm not getting all the confluences that I like. So especially if, let's say, you see the setup here, the first break is like, okay, well, let me see another break, or you make more headway if you're going to really run out the highs. I will increase the risk a little bit to see it actually. If you get up here, then I believe it'll continue, right? That doesn't necessarily mean that this setup isn't valid. It's actually a very valid setup. This is in open waters, but something about the way that this popped and then dropped, it just doesn't sit well with me. Popping up, getting really extended, and then dropping back down with a nice gap too. That gives it a little bit more probability to kind of close that gap and increasing your chance. So we do want to see a little bit more on the break to highs. Right now, I believe it is. Yeah, it's still kind of failing. So we do want to see that break to the upside to see this as a viable option, like a retest, so to speak. Yeah, retest break. You got T-Mobile, or excuse me, AT&T. Sorry. Uh, Yeah, same, a little bit of the same story. So a lot of the market is a little bit of I wouldn't say in a bubble, but it is extending. But with more liquidity flooding the market, you could see a little bit more of this. So kind of just brace for impact. Also, this is a really good time to kind of hunt for value because in these kind of environments, high tides do raise all boats. And as money sloshing around, it's going to fall its way into the little crevices of value, and you'll have something good. So kind of look at value. We talked at some of the things that we're looking at for value in our Sunday video. Definitely check out the Sunday video for a couple of days ago where we kind of explain that, hey, there's some items out there that have good value. Target, a good old Target, massive drop there based on earnings. But this is kind of what I'm talking about. You can go look at the fundamentals and say, hey, does this company have fundamental value? And what's the likelihood do we believe that Target can bounce back? If you get into a buy bias here, I'm not recommending that you do that. But if you do get into a buy bias here, still have a plan. Either way, right? You can take this buy as it breaks, and then you can stop out at the low, whether it's buy shares, getting contracts, whatever. But once it starts getting to 3 ATR territory, reversion to the mean trades can become valid for me. Reversion to the mean basically means from 3 ATR to around 8. The 8 moving average, or even the 21 is kind of the target or danger areas, really. So you see here, hits 3 ATR. Where does it go first? Well, it goes bounce back into the first danger area, which is the support level here on the weekly, right? So that is a valid setup if it hits 3 ATR. You can get a buy bias or a sell bias if it hits positive 3 ATR. Same deal, right? VUG. So Vanguard, shout out to Vanguard, had a couple setups back here that played out very nicely. Same thing here, played out very nicely, and here played out very nicely. So I like to take note of the stocks that your setup works exceptionally well on and your setup doesn't work on. Right here, boom, very, very nice. It's been in a very nice uptrend. So you want to be kind of cognizant of the ones that your setup works extremely well on. And Vanguard has been one of those ones. Haven't taken any plays on it, but again, this is a new system. And that's why we're kind of making these videos. Um, I would say, trading in the markets for about 4 years. And then all the learning, we just went on and said, hey, we're going to invent a system that works for us. And so still a little bit of back testing and just kind of confirmation and kind of surreal that, hey, we have a pretty cool system that works for us. And it helps us envision the market pretty good. So Vanguard looking really strong, though. Been in a very, very, very defined, very powerful uptrend since all the way back here. Go ahead and mark that on the chart for you guys. So what I like to do is we use multi-time frame analysis over here as well as fundamentals. And so haven't marked up like all 400 or 4,500 something odd stocks. But when you do see something in a powerful uptrend, just kind of mark it and mark where it starts. On the weekly, we just do a basic moving average convergence divergence, essentially looking for golden crosses or death crosses. Golden crosses being the shorter moving average is cross above the longer moving average. In our case, that is the 8 and the 21. Right, a lot of these things we go over in our Sunday video, but as it crosses, then you get this. Well, this is how we just quickly identify the trend. Then from the trend, we go back and we say, okay, the trend has been established. Is there a setup? Is there a setup and a trigger? So right here, we see a setup here, and the trigger is a break above high with a plan to be a 2-bar professional. In this case, we respect all of our buyers, so the stop would be 22, or excuse me, 224 and um, and 8. And then from there, we see that Vanguard check with a trend. What this helps you do also is it helps you not to be a buyer just off hype. As you can see, Vanguard took off, but remember, when do you want to be a buyer? You want to buy the dips. Okay, you do not want to be buying at all-time highs. You want to buy the dips. You want to short the rips, get in that really favorable position. This first indication is like, hey, pretty straightforward. I get an indication which will come up in our in-play scanner, and then we can start making plans from there. Okay. XLC. XLC and Stratosphere, just giving you a heads up. This is what we like to call a blowout candle. So at 3 ATR, kind of at highs, when you start seeing setup candles kind of at the top of ranges, this is kind of where, let's say you were in a position either off the break here and on the run. This is kind of where I'm saying, hey, we had a nice run, nice triple, very, very good play. Even right here or right here, this is kind of where I'm like, okay, things are getting a little extreme at 3 ATR. Let it go. Um, you know, find the next setup or make a decision to take some profits. It's this at this point when you start seeing something like this, it's time to take some profits. This is about as good as it gets. You're at highs. There is a setup well above 3 ATR, almost 3.5. It's definitely a good idea to take some profits here. You don't want to be that guy, woulda, shoulda, coulda, it go YOLO to the moon, right? Get your base hit and move on. This is a world of abundance out here, okay? So what we do have also, some other setups here, not necessarily ones that are keen on our system, but they are ones that are keen on um, traditional systems that we were taught by other mentors and other training programs. So here, right, this is what I'm talking about. We're in negative territory. And as it rips up into this level, right, you start to see some resistance. So how would I play this? I definitely just take this from a weekly standpoint, not this week, but the previous week. If it breaks below that, we would be in play. I would ideally look to see if this kind of trended a little bit more tighter. This being the bonds, I would want them to trend a little bit more tighter, and then break this week. Ideally, that's what I want to see if I was a bond trader. Kind of same thing for all these are just kind of different yields. One's like, I believe, the 2-year, and the other one's a 5-year. I could be wrong about that. One might be the 10-year, but essentially they're bonds. Then you've got yen. So yeah, forex here. Yep. The 6J. Could be seeing potentially a trend change. You do have a higher low here, but you're not going to really know if there's a trend change until there's a higher high, right? So this right here is a higher high, and this right here is a higher low. The jury's still out. The jury's still out. If we can, if you notice, there's been some massive pain in the yen. Just absolutely massive pain. Um, really had a slight respite here, but and this is why trends are so valuable. Like, I think most people would agree that seeing this, even from a weekly standpoint, you can kind of get a direction of what direction this market's going. Just a very simple system, top left, bottom right, And a moving average is kind of, hey, heads up, you went from this, you're going to go into the second stage, whether it's accumulation or distribution, depending on what side of the chart you're on, right? Um, Obviously, it's accumulation, it goes into acceleration, distribution, deceleration. That cycle kind of continues, and you understanding what part of the cycle you're in is going to be a huge part of your training. We do talk about that a little bit over here, but where are we right now? Obviously, deceleration, acceleration, deceleration has continued, right? So this could be setting up for some acceleration. Couldn't even tell you, but right now the trend isn't showing that. We don't get any golden crosses, so we're not going to make that statement definitive yet, as of yet. We also have a meta here. Very, very powerful stuff on meta. We actually did have, I believe, a butterfly that it ended up going for nothing. Like it popped up into our range and it was so quick, we weren't able to get out of it at a nice hefty 100% return. It is what it is. These things happen. But Meta has since kind of bounced back into what we traditionally would see as a good buying opportunity. Bounce back below the 8 pair moving average. Bounce back above on the weekly. You could take that, break up high, stop out at the low. No one's gonna fault you for that. It's just a good traditional, nice, juicy, clean setup. We have XCOM on here as well, but watch out for XCOM. It's looking a little heavy. If you notice, if you checked out our Sunday video, we kind of talked about the XLE. This is one of the heavily weighted things inside of the energy sector for SPY. So XOM, it falls into that category, and this has been one of the more laggard sections of the SPY is XLE. So you can potentially find some really good value, and I'd be watching XLE like a hawk, man, because that's where a lot of your value deals are going to be at. But price and fundamentals still play a factor, right? The demand for natural resources are going to be, how can I put it? They're going to be in demand essentially with what's going on in the global environment. So just kind of watch for certain spikes in that. We already talked about kind of SYM and our in play. So we'll go ahead and skip over that. But we got Merrick as well in a downtrend and very, very juicy rip. It's kind of on the bleeding edge of where we find edge, so to speak. So if you could get below it today, but even then, we just kind of want to be aware of what's going on. The fact that it's already here. Ideally, we want to be a little bit deeper, kind of like one of those rips here. But it is a slight rip, so you might just get a base hit down to lows if it breaks. You know, the edge is still the edge. You did have significant returns, like back here. So you could have got the position here, respecting all of your buyers. So this would have been your stop out and a nice juicy follow through. Let's say, for example, we were gonna put it on the daily, what I'm talking about, and tell me if you'd be okay with that. So essentially, you did get some. It's not necessarily perfect, but you did get a break here to go ahead and get it into that position. So we'll go ahead and put the candle. Like say, hey, it bounced up here. You got the break, but let's say you didn't take the open. There was an opportunity. This is where you're like, hey, I don't like that price all the way down here. If it bounces up here, I'll take it. Right? Do it however you want. But the stop is here for sure. So you stop out at the high. Are you okay with holding it for the next 3 weeks? Let's see. 1, 2, 3. Yeah, roll, make a decision, whatever you want to do. Hold it for the next 3 weeks. Hold it for the next 3 weeks. You're good to go, right? So it's a good look at potentially just following the edge and following the trend. Don't make it more complicated than it has to be. Just continue to be consistent with your setup. Keep it simple. GE, absolutely love this parabolic pretty much in GE. And what I'll say about GE, right, is there is actually a setup here. 1, 2, 3, 4. So it has trended kind of back below, right? And then you could say, okay, well, did it break the low? It did, but it bounced back. So I call it peekaboo, where it peaks your stop and then it just bounces immediately. This is kind of good and bad. If it does that, you can put it back and see if the market's playing with people's liquidity. I don't, you're not going to see that too much with the overall market because it's kind of hard to bully a whole market. But for one stock, you can that can happen. So it's just something to keep in mind. that peekabooing happens a little bit. The smaller the company, the smaller the instrument, the easier it is for larger hedge funds or maybe a big key player to come in what I call bully it, which means drive the price to a favorable price and then move positions from there to kind of catch liquidity. GM. Now GM as we kind of discussed, I think maybe it might have been in a previous video. This is also is in play, but kind of at highs though. So we ideally we want to get in like down here, uh, but we still put the alert there to track to see what's going on. We want to be informed about things making new highs because you never know. This could go into power trend. And you just want to be aware of it. Like, man, this is kind of cool. GM's new, whatever the news article says about that week or that year, that month is actually playing out to where these are the factors that cause stocks and companies to go, berserk. So we want to kind of get that for our own systems, our own data to see what the market's appetite is for. You do have run. It is teetering on the level of which we like to play, which is around that above $10 mark. So it's still good to go. It's in negative territory, but this is kind of what I'm talking about here. This play kind of makes a lot of sense, right? Goes up, you're in negative territory. Tracks below, stop out of the high, but there's not really a gap where you can get very close on the within the day. You either almost take it at the open and run with it, or you don't. And that's kind of the risk. So there is certain ways to run that, right? But you've seen it break like this, you could essentially say, well, there's a number of things I could do. Because of the volatility, I could sell here instead of buy verticals. I could, sell verticals. Obviously to the downside, right? With a downside bias. Or I could, get a butterfly at a certain level, aiming for danger area within the next 3 weeks, right? So shout out to Run. It's running, that's for sure. But now that we're kind of getting close to this support level, just to kind of keep in mind, there is some potential. It has tested this level multiple times. I'm going to mark it out for you guys so you can see it. But essentially, it has bounced down to these key levels a couple of times. So just keep that in mind. The market has no problem using that level of support, and you don't want to be the only one who doesn't respect your other buyers there. So ARRY, ARRY. Definitely defined downtrend, kind of in a current squeeze position. It's been in a squeeze for a little bit. We could say, you could say about this, not really looking too much to see any major move in this from the bottom continuing down. You're at 3 ATR. The market kind of respects this level. So why do I say that? It's only because, I'm looking left, right? If we put the levels here, same thing as the one we just did. People have no problem respecting that level. Then who am I to judge? Now, if it breaks that significantly, obviously, it's a race to the bottom. It's just something to think about there. We do have also Comcast and DD. So Comcast, as we've been watching, Comcast is in the XLC, and XLC has been performing very, very well. We made massive gains on Carter, CHTR in the space. Absolutely juicy rib there. And I believe it has a little bit more room to go. Kind of track sideways a little bit, kind of making this bear flag. So, but not necessarily something that we're going to be in, because that's not necessarily the setup that we want to take. We want to take our system because it has a pretty good defined edge and it gives us a nice plan. But Comcast, kind of track it in that same ballpark. What I would do is, if you wanted to trade Comcast for sure, if it breaks a high, stop out at the low on the week, and then look to trade it up into 3 ATR territory. If it gets up to there, 3 ATR territory, like how you would take this play on the pullback, if it breaks high of the week, you could take the buy, stop out at the low. You wouldn't have got stopped out, but it would have been really close, real nail biter there. And I would say, you get close, but hey, you got to be disciplined, got to stick to your guns, got to stick to your rules. Um, the market will respect your rules if you respect your own discipline. So do what you got to do there. DD. So DuPont looking kind of good. So I would say this is kind of more what we like to see um, on the break, right? Break up, and then nice pullback. We there I think we saw this pullback in I forget which one it was, but essentially, right? How would we play this? This is current week, but if you get necessarily like this is where I would necessarily be looking to want to get in, right? If you had this nice pullback and then this candle popped above the 8 period moving average, once it pops above that candle, this is your buy candle, this is your stop out candle, or this is your stop out level. So buy level, stop out level, entry candle would have been last week for DuPont. Um, so you can go ahead and take that. Like you could still, the trigger is still there. You could take that with a stop out at the low. I would be waiting necessarily for our edge, which is something like this. See you come in, boom, absolutely fires off. Now this is an earnings play. We do kind of avoid earnings plays uh, because anything can happen. Volatility is just massive at that point. But the setups are definitely there for sure. This one happened in open waters and it played out beautifully. You see this right here, 1, 2, 3, 4. Definitely entry candle here. Stop out at the low while respecting all of our priors. Kind of give yourself a wider stop, and then it absolutely rips, takes off. And you had a few opportunities for a blowout candle and a couple opportunities for decision. First decision would have been the open here. You definitely could. Probably gonna get a slew of alerts, so just brace for that, guys. But blowout candle number two, and there we go. So here we go. We're gonna tap into PCG there and T. These are some of the ones we kind of just talked about here. We'll go to T first. Did pop above, so we just want to be kind of aware of what's going on. There it is, and then PCG. There it is. So for we'll go ahead and take this, but we won't take a lot of it if we can afford to. Essentially, what we do is we'll come in and do a 20, like 21 days, but we like a 50 delta, 50 delta and 20 delta. So we'll take the 50. Boom. Is that right? It's essentially saying our debit is 12 bucks. Hmm. 12 bucks. I'm not sure how it's calculated. Well, there's no bid there, so maybe the bids are coming in. Maybe. We'll get 10 of them. We'll see how that plays out. So as it kind of breaks above there, we might actually have to tell it to be a little bit more aggressive on the buying because of the way the setup is. I do believe it probably will run. So we'll give it that 12 and we'll go ahead and push it. That's about all we'll give it. There. Probably get us in here pretty soon. We'll see. Yeah, really liking that setup, man. PCG, really liking that setup. So what would be the essentially the play? Our stop out would be at the low there, and boom, got a low, very 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 wide stop. And then we would be looking to make a decision and take profits at the first sign of danger, which would be the high here, about a 1 to 1, but it's cheap, so we'll take that. So we'll let it play out. If it gives us our entry, cool. If it doesn't, cool. But that's kind of what the plan is. Let's see what else we got. There's a lot more in the slots, that's for sure. We're not going to go through all of them. And plays kind of go away throughout the day. That's why you have to do them in the morning. We'll go look at the broader market and see what it's doing currently. Big boys. Let's go look at the big boys. Okay. So I'm seeing a lot of red on the board, but that's okay. Let's go take a peek. XSP in the stratosphere. So shout out to it. Uh, so what is XSP? Right? It's essentially it is the futures market for the SPY or a micro SPY. Right? It's not a Big Daddy SPY. So we can go look at Big Daddy SPY, but they're gonna track pretty much one for one. The VIX, not tradable as an instrument, got it, but a little bit of small green for the VIX there. Not anything crazy, but the VIX has been relatively low. So post election, VIX has been dropping negative territory here. The kind of the low is 12.25, so not too far from that. That is good, right? And then again, as we've been saying, the energy sector, watch out for it. It could turn around real fast, but it has been in a little bit of a downturn. So keep that in mind. Could have took a position here for a nice rip with a blowout candle right there. Not too shabby on the CL. Let's see. Let's go take a look at everyone's favorite SPY, and then we'll go look at some of the big boys. So it hit highs yesterday, and you could expect to see it be a little heavy over the next few days. But we did end up taking. I'll show you what we got for the Qs. We did end up taking this position here. Uh, Kind of made a decision at the first sign of danger, um, for a very very nice profit. And then we're looking for it to continue. Now the overall trend of we're gonna go zoom in here is it has been respecting these highs. So 1 week sold off, and now it's testing it this week. But significant buying pressure into the highs. Hopefully we get a break. But if we don't get a break, I can expect, you kind of expect to kind of push your stop loss up and take your licks and keep pushing. You can also take a look at the Bitcoin ETF. It is kind of pulling back from highs. We were able to take some profits from GBTC as well. Catching, if you like, the system still is, the system works pretty good. If you had a buy biased, right, this probably would have been a very nice candle to take a buy biased on, right? Especially going into 3 ATR on the weekly, this buy bias makes the most sense. And so I get more biased when on the selling side of things, excuse me, on the buying side of things, when it starts hitting 3 ATR and you have a name brand. So if you have like a Tesla or Bitcoin, or you have a AMD, NVIDIA, when you start hitting that 3 ATR mark on a and there is a confirmation that, hey, people are stepping in, I can take a buy bias play for that. Didn't take it, but because we were already pretty leveraged into, I wasn't looking to add any more leverage to offset the balance of the portfolio. But there was actually a couple set, one and then two. Could have took either one, would have worked out really really nice on the buy bias. Again, this is at 3 ATR too, so it's not like we're just buying in space. This is coming off 3 ATR, making higher highs as well. Ethereum, different instrument, but kind of tracking in the same ballpark. Um, the risk to it was pretty significant. It did hit that 3 ATR mark, but you are in buy territory. We've been in buy territory for about 4 weeks, so looking for a pullback and just wait for it to come to you. You don't have to go chasing these opportunities. Now there is a way where you could be like, hey, your setup doesn't give me a Q on the trend. Fine. Still have a plan though, right? You can say, okay, if you trade above the 8 p.m. moving average and above the previous week, I'll take a buy with a stop out of that week's low. One of two, right? We're 2 bar professional, even on the weekly. So this is your 8 p.m. moving average. This is your 21 p.m. moving average. Awesome. This week there's a negative, then positive, right? and then second positive. So this is would be our entry with stop out, respecting all of our buyers, right? It does end up dropping and then opening down below your stop. You got stopped out before the rip, right? Just still have your plan, and I would stick to it, because the one time you don't stick to your plan and you start thinking you're better than the market is the one time the market will spank you. So just, this is part of the game. This is part of getting your licks. Okay. But that's all we have for you guys today. Guys, I really appreciate you. We'll go back and check on our PCG. Probably didn't get filled here. But it is what it is. Let's go see. Did it push, or is it actually push? Nope, it's pulling back. So we'll see if we do have to chase. It's hovering around where we want to get it, and we don't want to let it get too far. So thank you guys. You have an awesome rest of your day. Have a good day, and goodbye.